Welcome to this afternoon, yes, it's afternoon now, panel session. As Natasha mentioned, Future of Capital, Reacting to Increased Volatility. Before we get into the questions very quickly, I'm just going to ask the panelists to briefly describe the background of their companies. Obviously, you can look up their bios in the app and on the website. Nishan, do you want to start?
Hi all. Foundation Holdings is a private equity family office. We invest in healthcare and education in the 6 GCC countries and in India.
Afternoon, everyone. My name is Zia, and I work for Epicop. Epicop is a multilateral development financial institution which is owned by 10 member states of OAPEC, and we invest in energy and energy-related industries, specifically in the Arab world. We invest in project finance, trade finance, direct equity, and we do financial advisory also. I look after the direct investments, and we are probably one of the few institutions in the region which are AA2 rated.
Essam Albakr, we're a Riyadh-based private equity focus on credit finance, VC, primarily we do trade finance, and we do advisory. Our market focuses Saudi Arabia with specific areas of mandate, including Africa and the MENA region.
Thank you very much. So let's just jump straight in. And obviously the pandemic is a topical discussion. It'll be very interesting, I'm sure, to all the audience here to hear about how the pandemic affected your investment process. Assam, do you want to start?
Can you repeat the question again?
How did the pandemic affect your investment process and your investment style? And how did you make adjustments to your investing?
I mean, the pandemic and the effect, the lasting effect, at least on the market, as we see it, has more or less changed the general perception of investors and the way they invest today, especially with specific areas and criterias of looking at more favorably liquidity or liquid investments, short hold. We see it across many of the family offices and individual investors. For us, what we see is today is pent-up demand on various sectors, including VC and also credit finance. Most of the results of the pandemics are yet to be seen as things recede back to normal. But we're very optimistic, at least our outlook for Saudi Arabia.
I think I would like to go back to the beginning of the pandemic when I think there were doomsday prediction by everyone that war is going to end and there would be no future and you should not invest and all. I don't think our strategy changed over the period of COVID or even now. We are a long-term investor. We always believe that these kind of, I would not call it a regular event, it's a black swan event. But I think it made everyone realize that a real big event can happen, which can have a long-term effect on your investment portfolio. And the conventional wisdom of preserving your capital, doing detailed due diligence, not chasing assets which are flavor of the month kind of investments, always pays in the long run. This was our view. Like today, I would like to, I think we should be cognizant of the fact, I won't say I'm not a doomsday guy here, but I would like to say one has to be cognizant of the fact which are happening around us. Most of the countries now are, developed one at that, are back to pre-COVID time, and the economic scarring which the world was assuming hasn't really happened now. But the factors which we should be cognizant of are the supply side factors. There is a shortage of everything, whether it is silicon chip, it's cars, it's workers, it's ships, vessel, containers, everything. The second is, of course, the energy prices, I would say, which have really increased in the last few months, and there is a consensus going to continue there. And I think you all would be aware of the COP26 commitment to the two announcements that came up. The effect of that on the energy prices, we still have to assess. And the last, of course, is the inflation and interest rate. Based on this, I think what I would say is that we haven't changed much. We will still be believing in preservation of capital and looking after good asset at good price. I think the good price is the most important thing.
Sure.
So when it comes to private equity, there are three stages. There's investing, there's growing, and there's exiting. So firstly, on the investing front, healthcare and education were generally resilient sectors pre-COVID and continue to be resilient sectors post. So I think I would echo what you said, which is that our investing strategy has not changed pre and post-COVID. Naturally...
So was that resilient for the healthcare and education? Both?
Yes, both. Naturally, and I can see the
yeah, because I'm confused, because I would have assumed all students were being kept at home, so
yeah.
Although educational establishments did keep charging students as if they were attending, even though they were doing online distance learning.
Yeah.
So there was no discount given to students, and a lot of them were very upset about that.
Yeah, so you're a parent. Look, I think that our education strategy, again, pre-COVID, was that we anticipated the shift towards omni-channel education prior to COVID. And in fact, we started due diligence on ed tech business in India called Topper in the fourth quarter of 2019. So fortunately, those COVID tailwinds actually assisted us from an investing point of view. But the thesis was always that education delivery will continue. Right. It's just the form may evolve, it may merge, but there'll be no substitute for that interaction between a teacher and a student. So on the investing side, I think that while broadly these were two good sectors, I think naturally...
Sorry, just on the healthcare side, I know, like, for example, in the UK, a lot of procedures were put on hold during the pandemic and after the pandemic. So if you did not have COVID, you could not get treated for anything else, like if you had cancer treatment, if you had bone therapy or kind of like a hip replacement or knee replacement, any of these other things which are quite costly and which are profitable to the private hospital sector.
Exactly.
So how is it that when you say the healthcare system the healthcare investments were resilient, how do we kind of marry those two perspectives up?
Sure. So I think firstly, there certainly was a short-term impact on capacity in the private sector. And as you said, these hospitals were ordered to be made free, beds were ordered to be made free for a short-term growth in COVID patients. Now, I guess taking a step back, the fortune of private equity is that we typically invest over a 3 to 5 year period, right? And so we were fortunate in this part of the world to only really have a 3 to 6 month hit, which is only 2 quarters, right, over a sort of 12 to 20 quarter investment horizon. Now, the second challenge that we faced was there was also impact on transportation logistics. So even if we had genuine patient demand to get to the clinic or the hospital, sometimes they just couldn't get there. And then, of course, the third was patients' reluctance to go to a healthcare facility for an elective procedure and maybe contract COVID while there, right? So there were 3 main challenges that we faced. Now, to answer your question, we've seen pent-up demand right? And generally, we operate in semi-elective sectors. And so, as an example, we have an Indian ophthalmology hospital chain called ASG Hospitals, right? And again, India had that first wave, second quarter 2020, and then unfortunately there was a second wave, second quarter of this year, right? And so we've obviously had peaks and troughs in our patient demand, but for the half year ended September, so from 1st April to September, notwithstanding that second COVID wave, our revenue was double last year.
Essam and Zia, in terms of other areas where of the industry, of the sectors where you found resilience in the market, resilience in profitability, can you talk to us a little bit about those areas that you did find any resilience in?
I mean, it's going to be very difficult to identify specific areas, but it all depends really on the investors and their patience. But you know, I would definitely echo some of what my colleague said with regard to different families, different investors. It's very much, you know, if you look at the way they perform as far as their investment, it's very idiosyncratic, so you can't really paint them all with the same brush. But as far as the resilience, at least in Saudi, we saw many sectors really hold tight, at least during the pandemic. And some of them really, you know, went under, and they suffered a lot because of, you know, the curfews and most of the disruption that has happened. Real estate, we see it, one industry at least weathered this pandemic as far as...
So Essam, just on real estate, I want to pick up on this point because in many parts of the world, like landlords were prohibited from throwing out tenants who were late with their rental payments or hadn't been paying their rental payments because the government kind of mandated that. Presumably, just can you perhaps talk about the local kind of legal system and architecture around what landlords can and can't do with respect to tenants who are paying or who are missing their rental payments?
Well, let me tell you how most governments reacted. A lot of governments were very quick in introducing stimulus that really helped offset some of the losses, whether it's real estate, whether it is different industries. I mean, we saw in Saudi Arabia the government postponing payments on labor fees, on even giving them holidays for a year or two. So that really helped a lot of industries weather this disruption. As far as the real estate and the landlord, they were not specific areas, but I think most of the landlords, they were very much cognizant to the fact that I want to keep these tenants, so they were able to offer discounts, they were able to offer delay in specific payments. But looking at Saudi, we've only had 3 months of lockdown. So if there is any country that performed exceptionally well across the world, was Saudi Arabia. Today we are 70% vaccinated. We've bounced back in an upward trajectory as far as the economy is concerned, better than the pre-pandemic. And where you see other countries are trailing off because specifically they were late in the vaccination process. I think most of the economies will suffer and will continue to suffer because they were not quick in really enacting a vaccination campaign. And I think that is the solution. But what we saw of the last 2 years, at least in Saudi, we saw very prudent government, very aware of the consequences of any action of delaying any lasting solution, at least for the economy to recover. So we can see it today evident in a lot of the growth sectors in Saudi, whether it is F&B, entertainment, tourism. I mean, you see today Saudi Arabia as if there is no pandemic. We just inaugurated Riyadh season, which was, I think, two weeks ago. And that is a 6 months festive season that happens across Riyadh, and it goes on in different cities. So yes, we are today the result of the measures that were taken in the last 2 years, and this is what we are experiencing today, is massive growth, at least and there was a lot of, I personally read and saw many of the media painting a very gloom perspective on Saudi by saying, well, Saudi will have an L-shaped recovery. Saudi will have a U-shaped. We are actually experiencing a V-shaped recovery. And this is evident of what we were able to do in the beginning of the pandemic.
So this kind of leads very nicely into the next question, which is, what have you been investing in this year, and what are you looking to be investing in 2022?
Well, this year, I mean, we're going to be introducing our trade finance Saudi strategy. So during the pandemic, we were working on this, working with some of our potential anchor investors. It's a $500 million Saudi strategy. We maintain at least our operation in Saudi a little bit around $1 billion riyal worth of trade finance, which is our Sharia fund, which is an African fund, and we have our GCC fund. So this is on the credit finance. On the VC, we continue to work on pushing more or less the message of Saudi, which is investing outwards with a Saudi angle, and this is what we've been working diligently with various entities on providing the soft landing program for entrepreneurs coming and investing in Saudi through the entrepreneur license, which was introduced by MISA, which is the Ministry of Investment. So we see a very vibrant industry, and we continue to double down at least on the private equity side or the thematic side on credit finance, including private debt and venture debt funds.
Azia?
Two questions, so I'll answer one by one. To answer your first question, the resilience from our own personal experience has been some very obvious ones, which are like logistics, storage, oil and otherwise, energy storage, our energy portfolio. But the other area probably that is not so obvious is we had a wonderful last year on petchem. We have in a portfolio petrochemical companies and the legacy ones. So their 2021 has been pretty good for us. So this is how I'll say. So some obvious one, logistics and all, which we were not really expecting, but because of the supply constraint, it was wood one. Going forward, to answer your second one, the points which I mentioned to you earlier, those are the points that worry us, because sometimes I'm old enough to have seen flavor of the month, industry in favor, and all that. We know that if you use a proxy of liquidity from the money available to the funds today, that is close to $3.5 trillion. And invariably what happens is, whatever is the demand of the investor, the funds that are launched generally they cater to the demand. So if so much of money is chasing very few assets in the market, there is always a problem that if the horizon value doesn't change, and if you pay more now, your returns exposed are going to be less. Like, I'll give an example without giving a detail. We looked at an asset in one of the countries in the region, And the expectation of the return for a 15-year hold was a few percentage points. This is, I'm talking about equity return, not the project return. The equity return was only a few percentage points more than the sovereign bond of that country. Now, for us, it did not justify that to give us sleepless night and taking the business risk and all that for that percentage point. So yes, we are looking at assets, good one, even in those industries which are currently in favor. But I would say that we are saying more often no than yes, maybe before COVID.
So are you implying that there's a mispricing in the liquidity premium here? Because people are just chasing this, so much money is chasing this?
So much money, Hamad, is not chasing the entire portfolio in the market. So much of money is chasing only few select. I don't want to name because of some certain reason, but we all know in this room what kind of industries I'm referring to. But everyone is chasing those assets, a few sectors which are the hype words and all that, but certain other industries which have a huge potential. You could have a contrarian view. The word is still going to use many other things apart from, I'm not saying this, but let's say technology. The word needs many other things also. But if you all chase an asset, it's an obvious demand supply thing, the prices are going to go up. And like I said, if the horizon value doesn't change, end of the day, it's all GDP growth and blah, blah, blah. So the horizon value won't change. You're paying a high price, then don't complain after 5 years that my ex-post return is low.
When you made the comment about the $3.2 trillion amount of money, pool of capital that's waiting on the sidelines, I smiled because I did a piece of work on this earlier in the year, maybe end of last year, about the law of large numbers. And as humans, we just can't comprehend very large numbers, right? So I think the US deficit is sitting at somewhere like a couple of $1 trillion. And there was this statistic that if you lined up one US dollar bills, one on top of each other, you would get halfway up to the moon. And that is how much these numbers mean, right? Because you talk about in trillions, it doesn't mean anything to me, right? It doesn't, it's just such a huge number, it's outside of our perspectives. But when you put it in terms of, okay, you could climb up to the moon with this amount of money, then it makes it very real for everyone. So that's...
Be a smaller number then. Like for instance, in 2020, there were about 5 funds, they all investing in infrastructure, all in $4, $5, $6 billion things. Now they all have the money at the same time. The infrastructure assets are the same all over the world. They will all be chasing the same assets. And so much of money is there because now people believe, for instance, infrastructure is the industry to invest in.
Well, it's a bit self-fulfilling, right? When I was looking at kind of commercial real estate opportunity in the UK, there was like a lot of the large funds were investing in UK, in London, specifically London office space. And this is pre-pandemic, right? London office space. And because they were all chasing it, the returns on those office spaces were becoming better and better. Even though as a strategy, it just seemed to me ludicrous in terms of the return you would get from kind of income return you would get from that space. But it's a, time and tested kind of rule that if everyone chases the same kind of asset or investments, the returns are diminishing.
I just want to add something here, and it's very much noticeable that you see it in some of the markets here, everyone chasing the same opportunities, and I don't blame them. I mean, everyone is going after yield, but you see new emerging fund managers really very much cognizant of the importance of exploring new territories and opportunities, and far distance one from their local market, but trying to be more relevant to the market. And that's very important. Unfortunately, what we see is it's more of a copycat type of taking what's already in in North America and Europe and trying to copy it and apply it to this market. That is totally wrong. I mean, this market has its own specific requirements and needs, and it behaves different, even its investors. And we see that a lot in the originality of what our investors are looking for. They want to still invest, but they still want to be close to home.
Sean mentioned earlier about omni-channels and kind of using the digital kind of channels there. Are you guys seeing necessarily digital investments are becoming attractive to investors or to yourselves? I know, for example, there's been a few crypto platforms in the region that have started over the last few years or gotten licenses. What is the appetite for pushing the boundary on kind of new trends and kind of digital or crypto kind of space?
I can answer it in one word. We do not touch any crypto until it's regulated in Saudi. Yes, otherwise, for the last 3-4 years, we've had a lot of approaches from different cryptos, and when we go back to them and we say, we cannot introduce this, we cannot even touch it because it is not regulated yet in Saudi Arabia. And I see it across the region.
Difficult question, very difficult question. I would say that I don't entirely understand cryptocurrency. So unless I reach a point where I understand what it is, how it works, what are the risks engaged, probably I'll keep out of it.
I think the challenge with this kind of new area is one, you know, with anything new, it's sometimes frontier and a lot of things are happening, a lot of things are changing. And the other challenge is just kind of labeling in the sense that the first name kind of sticks and you kind of apply it to many different things. So whether it's a crypto coin or cryptocurrency or something like that, or whether it's an asset-backed, let's say an asset-backed token, for example, right, where you are investing in physical asset, but just the medium, or as the Shan puts it, the channel is a little bit different, is new. So there is some kind of labeling issue there where people kind of group everything together and not necessarily go in and do some digging.
Yeah, so I think we are a private equity firm, so we don't invest into currencies per se. But I think that there are two questions that we ask when we take a look at tech businesses. The first is a macro question, which is this COVID impact on revenue and revenue growth. Is it short term? Is it temporary? Or can it be sustained? Do your customers have sustained profound changes in behavior patterns, which means these businesses can sustain revenue growth, which means you can justify, you know, forward revenue multiples, which, you know, as an aside, is a very foreign concept to me as an investor. And some of the people in the room may have seen a edtech company in the States called Chegg, and its stock price dropped about 45% 10 days ago. Now, notwithstanding their Q3 revenue was only about 5 or 10% off, but they changed their Q4 revenue guidance by 25%, and then of course everybody started panicking. So I think that's the first thing, right? Which is now that schools are back open, now that colleges are back open, are still people going to be clicking into that online channel? And then the second thing which we test for on a micro basis is many of these tech companies burn through their equity in sales and marketing. Right, and so the question is, again, is that customer demand and that revenue growth genuine, or is it just an impact of sales and marketing? And I'll just close by saying that you know, they have ratios like LTV to CAC, which have been designed to try to solve for these challenges, but you know, there's a lot of gameplay.
So we just have 5 more minutes because some of us have calls to jump on calls after this. So I'm going to ask one last question, and then if we have like one question available for the audience, we'll do that, and then you can kind of grab everyone afterwards. Well, my question is this. Everyone knows that rates are being squeezed. Increasingly, people kind of move from public fixed income to private fixed income investments, and even now on the private stuff, you know, you're not really getting anything exciting in terms of your interest rates there. Which brings me to the next double-edged sword in terms of what normally people do to get more return, which is lever up, right? And we've seen this pre-2008, where leverage was such a sweet little tool where everyone got excited on. To what extent are you seeing leverage come back in investments in this space that you're working on to essentially provide investors with returns which are acceptable to them?
I'll go first, but I'm actually going to dodge the question slightly, if I may, which is that we don't use much leverage either at the investing level or even at the operating company level. However, we do have a candy which juices up our investment and returns, which is that we like pre-IPO investments. We have an IPO track record, and we're busy working on listing 4 of our companies in 2 different markets. Now, why do I say candy? Because I don't know for how much longer our IPO capital market's going to be open, and for how much longer our listed equity price is going to be as inflated as I personally believe they are. So that's what keeps me up at night.
Sia?
Yeah, sure. Let me explain how we work. We, as I said, we typically invest directly into companies. So the leverage at the company level or the investee company level depends on the business model and the kind of business risk that's carrying.
First question investors ask us, are your funds levered? And we say no. So most of our funds are non-leveraged funds. 2, as a fund manager, we don't seek that. However, we do advise our customers on debt restructuring, financial restructuring, and we work with some of the banks on really more or less facilitating that. Today, we are experiencing, to a certain extent, high liquidity by banks, and there is a push to really extend credit across the market, at least in Saudi. And that is really more or less encouraged by the government itself, and it really kind of like more or less enhances the cycle. We do see some of the investors, they seek a bit of leverage on some of their investment, at least abroad or internationally, not necessarily in Saudi.
Thank you very much, Essam. I'm going to have to stop it here. I did say that there could be a time for a question, but that somebody's been trying to call me for 3 times now, so I'm going to have to step away. But everyone here from the panel is available during the break if you want to ask any more questions, explore any of the topics. Thank you very much to all our panelists on your behalf for sharing and engaging in their thoughts and ideas with us.